Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw, I'm a senior market specialist at FXCM. Today is Wednesday, it's the 20th of December. My email address, if anybody needs to contact me, rshaw@fxcm.com. Just going to go ahead, bring up our disclaimers. And just a reminder that this will be the last week of webinars for 2023. I'm just going to keep the high risk investment warning on for a few moments longer. Good morning, Kim. Hello, Matthijs. Raj, welcome as always. Good morning, James and Mia. Nice to have you all on the webinar. Thank you, everyone, for signing in. Raj saying that the DAX call was a good one yesterday. We'll take a look at that. When are we going to have webinars in 2024? So there's going to be a change up in 2024. I'll discuss this as we move into 2024. We're actually going to be moving platforms to TradingView. So just bear that in mind. But what we'll do is we'll start off 2024 on GoToWebinar, and we'll slowly morph over into TradingView. So we'll start off probably on the 2nd, I think, Mia. Here is our market commentaries disclaimer. And references MarketScope 2.0 and TradingView.com. All right, so we'll just go straight through to trade again. You know, this is a chart that we have been looking at for months, I would imagine, and it's the real, and it's that downwards direction. Let's put on that RSI. We just want to keep on top of that oversold condition. Let's just bring in the RSI here. Okay, and we're not quite oversold, so potentially there is some room for movement. Some news that came through this morning was inflation out of the UK, which came in under expectation. So inflation moderating in the UK, and cable was down. Now, what's interesting is, of course, we entering in this environment where it seems inflation is moderating in most regions. So I think it might make trading a bit more difficult for us, because generally what we want to do when it comes to Forex trading is we want to match a weak with a strong, or a strong with a weak. Once you can match a weakness with strength, or strength with weakness, the positioning becomes more obvious than if you are matching strength with strength or weakness with weakness. What do I mean by that? So if inflation's moderating in the US and inflation's moderating in the UK, then we would expect weakness in both sterling and in the dollar. So how do we position ourselves? Which one's going to be relatively more weak than the other? So it's just going to be an interesting dynamic, I think, 2024 as we move into rate cutting cycles. We've been in rate hiking cycles, we'll move into rate cutting cycles, and then we've got to see which one is showing relative weakness. One way to do that is to use spreads, which I think we're going to have to use more and more of. We have seen them before. So let's just bring up US dollar first of all. So we're looking at the real rate on the US side. So what we can do is we can bring in US dollar underneath this. So let's just click on the plus button, go US dollar new pane, and basically keeping an eye on the movement down there and the movement on there. So it seems to be correlated here. So what we can do is bring in a correlation coefficient just to see what it looks like, and just go through to your indicators, go correlation coefficient, and we want to see a strong positive correlation here. So just make sure that we're looking at it versus the US dollar. Okay. All right, so we've got a very strong correlation here between the real rate and the dollar. It's at 82%. Okay, what happens if we want to look now at, say, the cable? Let's say we want to look at cable. So what we can do, instead of looking at US dollar, let's make this pound US dollar. Okay, I'll just use the FXCM instrument. And let's just take the correlation coefficient out. And now what we can do is we can start looking at spreads between the bonds of the two regions. So because the base currency here is pound, we'll look at gilts first. So just put GB, and let's take a look at it on a short, short end of the curve. So we'll take a look at GB02Y minus the US 2-year. So we're looking at the 2-year gilt yield minus the US bond 2-year yield. Okay, let's see if we get some sort of correlation there. Potentially some correlation. Take a look here. So you've got a down there, and you've got your movement down there. Okay, some sort of sideways movement from there to there, some sort of sideways movement from there to there, and then here is the upward movement. Here is the upward movement. Okay, so you can see there is some sort of correlation between the 2 years and the cable pairing. Let's put in a correlation coefficient there. Okay, just let me know if you're not following. I'm assuming everyone's following. We're taking a look at the spread and how the spread affects the currency pair. Let's just put in, what have I done here? GBP USD. All right. Interestingly, not quite as robust as I would have thought. It is 40%. Let's just maybe go through to a weekly basis. See if it's a bit stronger on the positive. You can see it shifted from a negative to a positive. Let's just try, instead of the 2 year, remember 2 years are good for monetary policy. Let's just see what the market is telegraphing here. So let's go back to daily. And what we're going to do is we're going to look at the 10 years. Okay. So this would be on the longer end of the curve, more sort of, instead of central banks, this would be based on market expectations. Let's see what we have here. Well, there's actually a breaking correlation here. That's interesting. Can you see the breaking? So it's actually the central bank flows that are driving. Can you see over here? Over here, we're all good. Okay. There, that's all good. We have a movement up here. That's all good. That's all good. Now it sort of breaks down slightly. It's breaking down. Let's just take a look at this on a weekly basis. Yeah, it's coming down somewhat. All right, we'll keep an eye on the spreads. Effectively, what we're trying to do here is trying to get a bead on which is the relative weaker in terms of the spread, and seeing if that is influencing the forex pair. It seems at the moment the more useful for us is the central bank flows, and we can just go ahead and keep we'll keep an eye on the spread as such. Let's just go through to market scope and see where is my market scope. I think it's back here. All right, there's market scope. Let's take a look at the cable pairing in more detail here. So we'll go to pound US dollar. Now, bearing in mind that the inflation came in softer than expected, go down to the hourly chart here. You can see that pounds falling quite heavily versus the US dollar here. Again, so that's what we want to understand, which is showing the relative weakness. Is it pound or is it US dollar? Because they both seem to be showing weakness in terms of, no, weakness is not the right word, moderation in inflation. All right, so let's take a look here. We've got cable on top of the 30-week exponential moving average. Okay. So the spread is between the two bond rates. Yeah. It's not the bond rate, it's the difference between the bond rates, right? It's a difference. What we're looking at is a difference between the gilt and the US 2-year. And you can see that we've got the, let's just go back to pound dollar. Pound US dollar is on top of that 30-week exponential moving average. That 30-week exponential moving average is pointing up. We've got the RSI on top of 50. Okay, go through to the daily. All right, so we are on top of this green trend line on the RSI. It is threatening to drop back into zone 2. We are in zone 1. That's between the upper blue and the upper red. Testing now to see if it's coming back down. What we can do, all right, is let's get rid of this trend line and let's put a trend line in over here. Okay, so if there's a break below this trend line, then there is some weakness coming in the pound US dollar pair. I'm just connecting that low with that low, and we've got the trend line. But I want to just reiterate, we're above the 30-week exponential moving average, the 30-week exponential moving average pointing up on the weekly. The weekly momentum is up. We're tending to be sort of zone 1 and now testing zone 2. The RSI is above 50 on the daily. We're getting a pullback on the H1 and we've moved towards a support area. Okay, we've got a support area here. So I'm just wondering if there is a potential dip in the uptrend here. And we'll go back to the 2-year yield, 2-year gilts. Okay. And let's got to see if there's going to be some sort of push up over here. There's a push up over here on the gilt side, and we have some blue there. In other words, we've got the 2-year gilt being stronger than the 2-year US. And we come back to this chart over here. I would see if we're going to get some sort of movement up here, and if we're going to get some sort of movement here. In other words, this looks like, just based on the top-down analysis, based on the spread, as if we're going to get a flick up here. All right, Raj, we're going to wrap up here as well. I could just see it's the top of the hour. We'll stop over here. I think just keep an eye on that S1 for support on the cable pairing. We'll stop here because I want to go through to our crypto minute. All right, so just an idea of what we're going to be concentrating on next year, because we're moving into a rate cutting cycle. We're going to have to measure relative strength, and the way we're going to do that is we're going to be looking at spreads. All right, so let's wrap up here. Don't get too flustered if it's a little complex, because it's relatively new. We're going to use it over and over again next year. All right, guys, we'll wrap up here and we'll go on to the crypto minute. Thanks very much.